If you're in an environment where the money's obviously bad, people are more aware of it. It's hard not to be. Like if your money supply is growing by 20% a year, you notice that pretty quickly. Whereas if you're kind of growing at a slower pace, you're able to kind of dilute people slowly, have all these kind of different frictions on them, and it's hard for them to realize or know that there could be something better. So there's certainly CBDC-like aspects. There's certainly, if there's a spectrum there, it's another step closer to CBDC, but it's different than a full-blown CBDC. I think there's a big correlation, and I think there's also arguably an even bigger correlation in the political polarization that happens, because people start to feel that something's broken, but then they can't necessarily put their finger on what's broken, in part because the way the system's designed, it's very opaque, right? The average person doesn't know what the money supply growth rate is, so they don't know why things are maybe getting more expensive than their wages are keeping up with. They see the wealth concentration happening, but then they differ on why that's happening, right? So some of the things are more transparent, like different, say, tax rates. And of course, they can be obfuscated by having it so that you can have all these complicated tax ways to, say, not pay significant taxes if you're wealthy enough, for example. So there's like somewhat transparent things there. But then, for example, they don't see like the differing kind of rates of credit that can be made available to different entities and how that can suck kind of value up to the well-connected. And so all this kind of steps along the way, there's just so many opaque things that are happening with the money system that fuels some of the big political issues that then polarizes people. And then they end up kind of talking about the same sort of thing, but in very different language and very different understandings of why this is happening or how to fix it, because the plumbing underneath is complex, it's opaque. And, it's just, unless you study money, and even if you study money, it's hard to figure out. But in terms of the money system, you don't see a lot of change from party to party in that sense. They tend to err in certain directions, but really especially in the US, but also just elsewhere, the mechanism itself is just kind of perpetuating. So you can make minor changes to that based on how you vote, but the actual structures are going to be different. I think that politics kind of seems to matter more for the social realm, whereas the financial realm is almost like a system, and that system's locked in, and that system changes very slowly.
Larry Fink's evolution on Bitcoin, from skeptic to believer. In the realm of finance, few transformations are as intriguing as that of Larry Fink, CEO of BlackRock, the world's largest asset management firm. He was once a crypto skeptic, but has now embraced Bitcoin and actively advocates for its mainstream adoption. Let's journey through the timeline of his crypto evolution, 2017-2019. Fink's journey begins with skepticism. In 2017, he voiced belief in cryptocurrency, but expressed concerns about rampant speculation in the market. Shortly after, in 2018, he likened Bitcoin to the Dutch tulip bulb craze of the 1600s, underscoring his doubts. 2019, the tide starts to turn. BlackRock hires Robbie Mitchnick, an ex-Ripple marketing exec, as its head of digital assets. This move indicates the firm's growing interest in cryptocurrencies. Fink also recognizes the need for better cross-border payment systems, hinting at the potential of cryptocurrencies. 2020-2021, a shift in perspective. BlackRock's Rick Reeder calls crypto here to stay and suggests digital currencies could replace gold as a store of value. Fink, in 2021, acknowledges that BlackRock is watching Bitcoin, and it has not yet been disproven. 2022-2023, embracing crypto. BlackRock plans cryptocurrency trading on its Aladdin investment platform. Fink confirms BlackRock's crypto research efforts and its role as the primary holder of Circle's cash reserves, highlighting increasing client interest. He suggests that global currencies might be outshone by crypto in 2023, indicating a significant change in sentiment. 2023, the latest developments. BlackRock files for a Bitcoin exchange-traded fund ETF, with Coinbase custody as its custodian. Fink emphasizes democratizing crypto, making it more accessible. He believes crypto could surpass global currencies. The future. Fink's crypto evolution demonstrates the growing importance of digital assets in the financial world, and BlackRock's involvement could significantly impact the crypto market. Anthony Scaramucci, founder of Skybridge Capital, believes BlackRock's Bitcoin AFIP approval could lead to a substantial price increase for Bitcoin, potentially reaching $330,000. Bitcoin's recent price surge is attributed to optimism around a potential Bitcoin ETF. Analyst Jeb predicts a bullish outlook for Bitcoin, possibly reaching $50,000 to $70,000 in 6 months, factoring in the April 2024 halving event. Let's continue our discussion with Lyn Alden.
Those that don't want issues focused on the money divide people to focus on other things. It's hard to say how much that is well crafted, but for example, you see in some kind of campaigns to stir political chaos, like when Russia would do it, they would purposely make all these different groups, and they don't really care about any of these views. What they're trying to do is sow chaos. But I think you can also have that domestically as well. You can kind of distract a group to kind of align with you against another thing, even if they're aligning against their own interests. Well, what do I phrase it right now is that we're kind of seeing the failure of incrementalism. So a lot of people, the way they engage politics, they think if we just get like our person in charge, we can start turning this around. And that person, either well-intentioned or not, gets eaten by the machine, and the machine just keeps going. And then people say, well, if we only get the next person in charge, we can turn this around. And so all these kind of like small measures are just going against basically the Borg of the bureaucracy of the system of as things are designed. And historically, you tend to see kind of like things go on and on and on and on, and then a gigantic trend change. And that's when it really matters what the culture of the society is, because that's when you can get either very virtuous outcomes or horrific outcomes. And the way I would describe it is that when you look at, like, I approach financial systems in the way that I approach systems engineering, like as though I'm analyzing a complex system, because that's what we're doing. And there's stable systems and unstable systems, or marginally stable systems. And the financial system has all of the traits of an unstable system, in the sense that for decades and decades, you have rising debt percentage of GDP, falling interest rates, which allows you to pay for those rising debts, even though you're getting rising debts. Basically, the interest expense is not rising. And then when you have a gigantic debt bubble, when you hit zero rates and you start going sideways to up in interest rates while you still have that very large public debt burden, that's when a lot of the things that keep getting there, you kick the can down the road over and over again, that's when it starts to materialize in the present. And that's when you look around and wonder, like, why is none of this working anymore? Why is this getting increasingly bad? It's because we've kind of extended the system as far as it can go.
Out of bullets.
Yeah, we're out of bullets. And now we're kind of dealing with the consequences of a system that always, for the past, say, 4+ decades or more, was always unstable. But that could be delayed, deferred, pushed onto someone else, often in the developing world.
Yeah.
Kind of push that. But now a lot of these things are starting to hit in the present.
So we're there right now.
Yeah, I think we've been there really since the global financial crisis. I think this is a multi-step process. That's one thing I cover in my work, is that basically these things historically, at least with the data we have and logically, tend to go in two phases. You have kind of the private debt bubble blows up, and then the response almost inevitably, not every time, but almost inevitably, is to push that onto the public level. So you bail out the system, you bring all that debt or a lot of the debt onto the public level, some part of the private sector deleverage, and then the public debt part keeps building. And then the second hit is when the public debt bubble starts to have a problem. And I think that's the phase that we're in now. And that's still a multi-year process playing out.
If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.